Good morning, good afternoon, good morning, whatever time of day it is where you are. Let me turn the Beastie Boys off. It's all kicking off. I'm waiting for Arno and JD. There's Arno. Dum dum dum. Invite co-hosts and co-host invite. Well, I'll tell you what. Whilst waiting for Jamie, I will quickly repost this to tell everyone that we're live. Can you hear me? Arno, you there? Arno? Arno, unmute yourself.
There we go.
Oh
Live.
God, mate, he's fucking good at this, isn't he? He's blinded.
I mean, I'm here. We've got it. We've got it sorted.
Right, let me just tell everyone that we're live. One sec, everybody, bear with me. I know your time is very valuable. One sec. It's one sec. Right, let me post that. Right, next up, do the legals. So it's all kicking off. As usual, nothing discussed on this Spaces session constitute trading or investment advice or infers any kind of endorsement by PiQ Global Limited, trading as PiQ or PiQ Suite, or its affiliates, including the hosts, which is myself and Arno Ventura of Capital Edge, and Jamie Dutter, dear friend Jamie Dutter, who's part of PiQ, is meant to be joining us, but fuck knows where he is. He's not here, put it that way, so I'm not getting into trouble, and I've even screenshotted just in case he tries. Oh, there he is, finally. Hang on. Invite to co-host. Let's wait for him to join. So if Jamie, if you can hear me, this is first Spaces event. So if you should have a invite to join the co-host. So accept that. Oh, connecting. Unmute yourself now. Come on, you can do it. Yes.
Hello.
Houston.
Jamie. This is Houston.
Hello, everyone. This is Jamie.
Hello.
Jamie's a very old friend of mine. Well, he's not very old, but he's been a friend of mine for a very long time, should I say?
Quite old. Quite
old. Older than me and Arno. Jamie's explore trader and analyst for the street in the city. Extremely experienced. He's now part of PiQ, which is excellent. So with Arno and Jamie, we're going to give you a short and sweet, concise, full of gravity NFP preview. Wow, yeah, look at me using long words. Is that it? That's hanging out with Michael Brown too long. I've got up to 3 syllables in my words these days. I'm getting really impressed. Arno, do you want to take us away?
Yeah.
Why are we here again?
Yeah, I mean, NFP. Oh, geez. Okay, the basics. I think the only thing that really matters right now is that 67 basis points that's priced in by the end of the year by rates markets. I mean, we've.
Nope. Is that you gone quiet or me?
In terms of how aggressive they've been and what the data has actually shown.
Hang on. Is anyone else having trouble hearing Arno, or is it just
me? I can't hear him.
Oh, Arno, we can't hear you. Jamie, do you want to take it on? What do you know about NFP?
Arno was talking about the 67 basis points priced in for this year. That's huge. Obviously, odds of a 25 have just sort of ticked up this morning. I think just to around 70%, 70-30 for a 25 or 50. I mean, there's a few things really. I think the 150 level is interesting. That's kind of the replacement level is what they call it. So when we dip below there, then historically unemployment's ticked up, and that's kind of what we're waiting for. I mean, we know non-farms is a sort of stick a finger in the air and, guess what number it's going to be. I think even, the data is being questioned by some, I think, I speak to.
I think it seems to be that big old revision that we had a while back seems to have basically, there's enough people out there with tinfoil hats before we had that massive revision. It's like everyone's like... But
absolutely.
Sorry, just quickly on this, because I think it's a really important point. I think Arno, Arno's booted himself off, he's coming back in a bit. Just one, because this is something me and Michael Brown mentioned a while back, so I'll be interested to see your take on this. I'd imagine it's very, very similar, if not the same. Is that, getting this data in the first place is incredibly hard, right? So I do feel a bit sorry for them, and they're expected to be like on to the actual person, the correct data, when it's a nightmare getting the data in. So I think, it's expected that we have revisions. I don't know why people get so like so precious about, oh my god, there's like, there's revisions given in and stuff like that. It's like, you would rather have that, no? I don't know.
Yeah, no, I agree, and that's kind of in the graphic that we put out. In the middle of it, I was trying to relate to infamy. They've all got it in for me when they put revisions.
Yeah.
Watch the revisions. Which we know about, and lots of people don't, and you get that sort of very instant reaction afterwards. But it is sizable. I think even like you said, though, collecting the data has always been an issue, especially now post-COVID. And even Powell again has sort of noted, the impact of, I think he said millions of people coming into the labour force, contributing to the rise in unemployment, from 3.4 to 4.2 or whatever. So, yeah, there is this question around that. He said he's mentally marking down, payrolls growth because of the downward revisions coming. So, aside from that, that 150 level is interesting. And I think then for, as a sort of fixed income person, I'm looking at the 10-year really, 10-year US yield, obviously, a proxy for basically global borrowing costs. And potentially, looking at previous cycles, basically rate cutting cycles, we do get generally a move higher, which we're sort of seeing. And potentially then that sort of goes to 3.9% or so. But then when the data gets worse, then we get the drop below the recent low. So I'm sort of watching that potentially, and then that moves the dollar and everything else basically.
So what in terms of, one sec, Arno's leaving and coming back in.
Gone now, isn't he?
He's gone. I think he's had enough, mate, to be honest. He is in Australia. I think he might have joined as like a covert kind of anonymous person, so he's not showing up, unfortunately. But he's gone. He's coming back again, bless him.
Shame.
So in terms of like the reaction coming into afterwards, obviously, as you said before, we know NFP is a complete crapshoot. Again, I've said it a million times before, but I'll say it again. It's one of those that you could know the data beforehand and you could still do your absolute beans on the trade.
Yeah.
Like you said, I don't understand why anyone would want to trade NFP. Obviously, you got the fast money and the real money effect as well. By which I mean, if anyone isn't aware what I mean by that, it's kind of the knee jerk money, and then all things being equal, over the following hours or sessions, sometimes depends on the figure, we get the real money coming into the market, especially to reposition. Given that, so I guess the question I've got is, given that we've got this massive elephant in the room, which is what is happening in the Middle East, and everyone's waiting for Israel's response to Iran, where we normally see the initial knee-jerk fast money followed by the real money, do you think there's a decent case to be made that we won't see the real money move or the real money coming back into the market because the real money wants to sit on their hands, just leave, basically ignore the US session because they well, do you know what, we'll come back Monday and see if there is still a session.
I think no, totally. You're going to get an initial reaction because you are with all the algos and stuff. But
yes, exactly.
And ahead of the weekend, ahead of everybody watching the oil price, basically, then that's all that matters near term. I think interesting. Some people saying about this is the last clean report, basically, before the next one, because the next one's going to be influenced, obviously, by the strike, by Boeing, and by the hurricane. So potentially, if that's a bit messy, then this is the last clean report, if you like, which I kind of get. And then obviously we have that one more just before the election and before the Fed meeting. And also, I guess, positioning wise, if you look at the 2-year Treasury, sorry, going on about Treasuries again being...
No, mate, it's important.
But looking at that, it's sort of neutral in a way now because it's sort of consolidating between 3.5, which was the low, and then 3.9, the next upside level. So in a way, we're relatively neutral. I guess that kind of tells us that, unless we get a massive, very strong report or a very weak report, then anything middling, we move on to oil, and we probably move on to oil anyway within a couple of hours. We do get a couple of speakers, I think, don't we? Williams and Goolsby out after the data. And I think, correct me if I'm wrong, they were out last time and they said various things before the Fed, but nobody paid any attention to them. So, yeah, like we said, with Powell kind of already mentally, moving down the headline at least, then yeah, that's kind of what we might get, I guess. There is, should say, there's a sort of focus on the unemployment rate, which kind of gets away from then that headline noise in a way, because we're not sort of seeing a typical pattern in the jobless rate. We sort of saw 4.3 in July, and then we moved back to 4.2, expecting 4.2 this time. And really, especially with that sort of SARM rule, as much as you want to pay attention to that, being triggered last time. Yeah, I know. I think she said it even herself, not to pay too much attention, but it got a load of headlines, that had been triggered. Then, certainly though the pattern is sort of not, it is pretty unique at the moment. We're not going up, like we've seen, and it's all down to, is it immigration, is it baby boomers exiting, whatever it is, so I don't know, unemployment, if that ticks up to say 4.4, then yeah, potentially, even a sort of 150 or 140 figure, but unemployment going up, that's what everybody's waiting for, I think, is signs of weak hiring demand, basically.
Yeah, I feel you. Just trying to see, one sec. Arno says he's there, but I can't see him. I can't add him, and I don't know what's going on. Hang on 1 second. Let me just see if I can do anything here. No, he's not. Arno, you're not there, mate. You're not there. Hang on. No, he's not there. Right. 1 sec. So just a quick heads up as well. So for everyone else, so this is what Goldman Sachs are saying on the matter. So they're estimating the headline non-farm payroll will rise by 165,000. Again, don't read too much into these exact numbers. Like, if anyone's trying to guess the number down to the individual thousand, then yeah, good luck with that. I think it's hard enough to get the handle right. Like, if it starts with a 1, I think they're close enough. I think on net, they said the big data indicators indicate the pace of jobs creation above the recent payroll trends, and that they assume an above trend, albeit moderating, contributions from the recent surge in immigration and catch-up hiring. Goldman Sachs also go on to suspect that the August payroll growth will be revised higher, always as always. Check the revisions, and has been typical over the last decade, though revisions so far this year have been disproportionately downward. I think that's how you pronounce that word. Again, I think that was 5 syllables, which for me is a massive word. Yeah, they also, yeah, exactly. I should be in the pub by now. Goldman Sachs also go on to say that they estimate hourly earnings rose 0.2% month on month, seasonally adjusted, which would lower the year-on-year rate by 0.1% to 3.7%. That's one for the purists out there, basically reflecting waning wage pressures.
Just on that, I mean, we're sort of moving on from inflation in a way, aren't we? Sort of, right, that's fine, but I think sort of 3.5% is what's needed to sort of hit 2%. Kind of thing is a general idea on that. So we're not there yet. So slightly elevated still. Just to pass comment on that. Yeah. I mean, otherwise, I always like to. Somebody brought it back in, the dollar smile. So
God, I haven't heard that for ages.
Yeah, which I've always liked. I think it's because the bloke who invented it, I worked with back in the day, a long time ago.
Name
20
drop.
years ago. Say again?
Name drop.
Oh, yeah. Well, no, I didn't mention him. I can't pronounce his name. But yeah, we always like the dollar smile. We always like something sort of simplistic, really, for me, that sort of,
absolutely.
Works quite well. So, and in this scenario, if we're getting data which is still solid, not recession, then potentially, as I mentioned, those yields can still go a bit higher, drag the dollar with it. But then if we do get this rolling over, I think it's great, fascinating that, there's so many economists who are waiting for that really bad number. I don't know whether you feel that, but I just, we haven't got it. We haven't had it for ages and ages, right?
Yeah. Well, funny enough, so very similar conversations I had this morning. It's like everyone's being like, it'd be the next one, Yeah, it's like, these perma bears as well, that like, I'm going to be right tomorrow. I'm going to be right. It was
at some point.
So Giuseppe, that works on Forex Live European desk. So I was chatting to him this morning. So obviously I'm covering for them in the early hours. and we were just talking about our hatred of technical analysis. I'm sorry if you're a technical analyst fan out there. I apologise profusely, but eat horses for courses, and I personally don't like technical analysis, and nor does he. And then we kind of then started bemoaning the cult of Elliott Wave, and in his words, as he rightly put, one sec, where was it? I don't want to get it wrong. Yeah, we've basically been in perpetual third wave on equities for about 2 decades, which I thought was a very good.
One day,
I think
Rodders.
was that was a very good way of putting it. 2 decades of being in the third wave. Again, I apologise profusely if you're a big fan of Elliott Wave. I would rather read tea leaves than look at Elliott Wave, but we digress.
Well, I read. I think one guy said the sting and the tail here. So the tail risk is we get a big surprise. And it's like, okay, yeah, you said that last month and the month before.
Yeah, well, not being funny, but
that's the tail
always
risk.
that's the GTC risk. Is there's a big surprise? Yeah, thanks for that, mate.
We'll
Cheers.
pay you for that. But
yeah,
I guess,
well, this is the sad thing, right? He probably gets paid. He probably genuinely gets paid big bucks for that.
No, he's very clever. He works on Wall Street. But I guess, when we get the October report, which is kind of people are looking at obviously already with all of the, the strikes, as I mentioned, and the hurricane effect.
Yeah.
Potentially, I guess, somebody's saying that could be negative, that number. But then you kind of think, oh, everybody realizes it's a dud number anyway, because we get the bounce back. So in a way, that is a possible scenario, right?
This is it. Yeah, there's so many variables. Like Michael mentioned this morning. Next, to be honest, I think almost this NFP number is a bit of a dead duck, to be honest, because everyone is already talking about the next one because of, well, thankfully the port strikes only lasted a couple of days, so they really won't have an impact. But as Michael said, we're going to get into like the fallout from Hurricane Helene or whatever, however we pronounce it. So yeah, the fact that we're already talking about November's data, obviously first, which will be October's data issued in November. The fact we're already talking about that on the morning of today's data makes me think that this could be a proper damp squib of an NFP, which that will rile some people up because people love that like talking about NFP. But so on the plus side is maybe this time next month Arno can get his act together and work out how to use spaces,
and we'll get him on. Yes,
exactly.
Totally. And have we
cool.
overrun? Slightly overrun.
No, I think that's mate. I think that's perfect. To be honest, who needs Arno? Arno, if you're listening, I apologise, but exactly.
I love him.
Well, JD, thank you so much for doing this. We need to get me and you need to do more of these together, actually. And also, I can see Michael getting a bit jealous listening in. But guys, thank you so much for tuning in. I hope we've added a bit of value. My final line on this would be my final advice would be: do not trade NFP. Go to the pub. But obviously, if I did that on my own, it would only last 30 seconds. So this is why we need smarter people like JD in the room. Guys, as well, don't forget, this is the last week to use the promo code BLAST on the PiQ suite. The prices are going up next week, hopefully, as if the developers can get it worked out. Well, no, it's more a case of me getting the marketing worked out, I'll be honest. So not only are the prices going up, but we won't be issuing anywhere near as many full 12-month promos. We will only be doing 6 months. So this is now the time to get it done. But yeah, guys, have a great one. If you are trading, keep it tight. As always, if you can't be good, be careful. If you can't be careful, buy a pram.